Assalamualaikum and hi to my dearest friend and to our beloved lecturer, Madam Susana Narawi. This is our group member and my name is Nur Fatihah Mulyani binti Aziz Maulana. We will present about audit of purchase and payment cycle. Let's start it.
Hi, my name is Felicia Gadung and I will explain the introduction part. The purchasing cycle consists of the acquisition of goods and services in exchange for cash or promise to pay cash. In addition, audit of purchase cycle involves purchasing transactions that start with the requisition of goods and services. Then, a purchase order is placed for the goods or services. The goods and services are then received from supplier, and finally is to record all of the bill and payment of account payable. Audit of account in the purchasing cycle usually consists of a combination of substantive tests and tests of control to support an assessment of control risk that is below the maximum or at the law. Audit objective is to evaluate whether the account affected by the purchase of goods and services and the cash payments for those purchases are fairly presented in accordance with generally accepted accounting principles. The key issue is to ensure that all purchases are recorded and not understand and all payable resulting from current purchase are recorded. Transaction objective is occurrence, completeness, cutoff, and classification. Balance objective, existence, right and obligation, completeness, valuation, and allocation. Presentation and disclosure, occurrence, right and obligation, completeness, classification, and understandability, occurrence, and valuation.
So, Assalamualaikum and hi, my name is Nur Syahidah Mira binti Muhammad Faisal and I will continue the presentation with accounting system and control activities. Accounting system and control activities is by implementing adequate control of activities. Is important for purchase and payable account because they will give an impact to the whole business. There are 5 main functions in purchase cycle should we know. First is purchase requisition. The document involved is purchase requisition form. Second is receiving and storing goods. The document involved is goods received note and inventory records. Third is recording the purchase and liability. The document involved is purchase journal and account payables. Fourth is preparing purchase order, and the document involved is purchase order form. And lastly is approving the supplier's invoice, where the document involved is supplier's invoice. So next I will explain about audit of purchase cycle in purchase transaction. So the first one is purchase requisition, and then preparing purchase order, and receiving and storing the goods for inventory, and approving supplier invoice. So first is purchase requisition. Purchase requisition is the first transaction trail of documentary evidence. It is the authenticity of the request from need to be checked first to ensure that there are no fictitious transactions created and to ensure the occurrence of the purchase transaction. Pre-numbered purchase requisition form is a form of control in order to ensure all the goods are received and ordered. Next is preparing purchase order. The preparation of purchase order is assigned to an independent department from the warehouse in order to avoid fraudulence of goods for personal use. Purchase orders are used as an audit evidence for the occurrence of purchase transaction. Then receiving and storing the goods for inventory. A proof purchase order will be sent to the warehouse, the place where the goods will be received by a storekeeper from suppliers. The storekeeper also will prepare a pre-numbered goods receipt note to describe the goods quantity and condition of the goods. Good receipt note plays a role as an evidence to support the occurrence of the purchase transaction. And lastly is approving supplier invoice, where a supplier's invoice will be sent by the supplier to the accounting department after the storekeeper received the goods. So here is the control that should be established by the entity to ensure that the objective will be achieved. First is completeness. All suppliers' invoices are recorded by providing serial numbers for all invoices received. Second is occurrence. All suppliers' invoices relate to a valid purchase transaction by checking the invoice and matching against the goods received notes and purchase order. Third is accuracy. All supplier invoice amount are accurately calculated at the agreed price, means that will be free from any calculation errors. Fourth is accuracy classification. All suppliers' invoices are correctly recorded to appropriate accounts, such as expenses or assets, by providing a code to each invoice. And next is occurrence. Payment are made to a valid supplier. The supplier's invoice is approved before the invoice is paid and recorded. And lastly is occurrence, accuracy, and completeness. There is no delay of payment or unpaid suppliers' invoices by preparing a pre-list of suppliers approved for payment.
Next, we will talk about payment transaction. In payment transaction, there is have paying the liability and recording the payment. In paying the liability, the account department is responsible for that supplier's invoice or process for payment on their due date. Payment is normally required within 30 days, where prompt payment discounts are allowed. 11 invoices need to be scheduled for payment within the allowed period. Payments are by check or typically by bank credit transfer for regular suppliers. The computer system can be programmed to extract the payment due on each day from the account payable master file, produce the check and a check summary, enter the payment data in a payment transaction file, and update the account payable master file. Before being dispatched, the check are reviewed by the account department where they are matched with the supporting document before being forwarded for signing. The signatory should maintain password control over the electronic signature and scrutinize the list of checks to be signed. In such system, check must be mailed directly from the computer department and not returned to the account department. With online banking, credit transfer details may be electronically transmitted to the bank. Access control should restrict this function to approved signatories. This is control over the preparation and signing of check and electronic transfer and related specific audit objective. Therefore, authorized personnel in finance department, authorized check signer should determine that each check or bank transfer is accompanied by properly approved supplier invoice. The supplier invoice and supporting documents should be cancelled to prevent resubmission for duplicate payment. The check signer should control the mailing of the check or initiation of the bank transfer. Where checks are used, none should be made payable to cash bearer and no blank check should be issued. Pre-numbered check should be used and Last but not least, access to blank check and to electronic signature should be limited to authorized personnel. In recording the payment transaction file in a computer system is created when check or electronic transfer are prepared. The update program produces the cash payment journal and general ledger summary and also update the master file. While control over the recording of payments, there's an independent check by an accounting supervisor of the amount journalized and post to the account payable ledger with the check summary received from the treasurer. Independently prepare bank reconciliation.
Test of control for purchase transaction. The first one, select a sample of purchase order and inspect evidence that they had been approved and matched with purchase requisition, vendor invoice and receiving reports and are cancelled upon payment. Reviewing the client accounting for numerical sequence of purchase order, receiving report and voucher, and test check a sample. To third, select representative sample from a file of receiving report. Vouch to relatable purchase order and purchase requisition. Vouch to vendor invoice. Examine supporting documents for evidence of supervisory review and approval. The fourth one, select a representative sample of transaction from the voucher register. Vouch prices to purchase order or approved vendor price list. Perform recalculation of extension and footing. Compare voucher register total to general ledger posting. The fifth one, ask about and observe the inspection of counting procedure for receiving and storing goods. And the last one, to review appropriateness of segregation of duties.
Next, I will show you on how test of control for payment transaction. First of all, ask about and observe the use of P-number check and test the numerical sequence in the check register or cash payment journal and unused check. Secondly, seek approval from the client to obtain a sample of cancelled check from the bank. For sample of cancel, such as examine for properly approved supporting voucher, agree amount on cancel check and supporting voucher, examine supporting voucher for evidence of cancellation of the voucher and vendor invoice, examine cancel check for authorized signature, trace cancel check to check register or cash payment journal and to account payable subsidiary ledger accounts. Thirdly, test arithmetical accuracy of check register or cash payment journal and compare totals to general ledger posting. And last but not least, review procedure for segregation of duties. That's all from us. Thank you. That's all from us. Thank you.